What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol BENE for Benessere cap acquisition. On the left-hand side, we do have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. This, of course, is the first time we've covered this one. This is going to be a sister company of DWAC that, of course, is Donald Trump's social media platform, SPAC merger, if you will. This is just another company run by the same CEO as an acquisition shell company. Okay, so that is why basically it ran here on Friday. In terms of today's video and the point I want to make, this is a very speculative space to be in. That's number one, right? So one, we'll put an S for speculation. And number two, look at the activity from the intraday session on Friday, right? So from here, the only time that this stock moves is when the volume came in. And when it did come in, you can see by the close of this candle and open of this candle. So number two here is going to be V for volatility. There was an intraday gap, basically meaning that the stock was halted. And whenever you're dealing with a situation where, it's kind of speculative, it's very volatile, there's going to be halts, I need you to remember one thing. This may not be a popular opinion, but you're essentially letting the market dictate what may happen to you. So when this is more out of your control, like Apple is not going to move like this, right? Apple has a very, standard way of moving. It likes the 50 cents. It likes the whole dollars. It likes to respect technical patterns. Whenever you're dealing with something like this, on the other hand, you're sort of at the mercy of the market, especially if you're, and I hate to put it this way, but if you're a retail trader, smaller account, you're not really going to be the one who actually moves this stock. Now, collectively as a whole, sure, a group of retail traders all come together. They all buy the same stock. We know what happens, right? We've seen the AMCs, we've seen the GameStops, so on and so forth. That could be what's happening here. But remember that you are at the mercy of the market. If the other people decide that they don't want to play anymore, basically you have to be aware that exactly like what happened here in this red move, the market can collapse from underneath you, right? There can be a rug pull. So the point I'm trying to make here is that you need to, whenever you're trading things like this, size your position accordingly. So if you're comfortable with losing $50, then be prepared to put in an amount where if this collapses and goes to zero, you're only going to lose $50. So if that means you're only buying 5 shares at 10, right? That's what it has to be. Say you're comfortable losing $5,000, right? That's a whole different ballgame. Okay, so now you can adjust your position size accordingly. And it's not to say that one amount is correct or one amount is wrong, but it needs to be adjusted based on your own risk tolerance. I'm not saying also that you need to size it for zero, but you should size it for a considerable loss on your position, right? Let's just think about what happened here. If we came from 11 all the way up to 19, it's not a perfect double, but let's just for the sake of round numbers, say it's a perfect double, right? If you were the poor soul who bought here at 19, and now all of a sudden we're trading back down at 11, you've essentially just cut yourself in half. Okay, so again, I'm not saying size this for zero perfectly, but I am saying be prepared for a significant loss and size the position according to that. So it could be 50%, could be 60%, could be 40% or 35% if you think you're a good trader and you can sort of beat, knowing where to stop out, right? So all I'm getting at is when you're getting involved in speculative trades, size the position accordingly because you are ultimately at the mercy of the market. Again, I know it's not probably a popular opinion here. However, it's one that will keep you alive and trading in a wild marketplace in basically the Wild West, right? This is the sort of equivalent of the Wild West here, whereas you might say Apple or, Amazon stock, those are much more tame and controlled, right? They respect analysis, they respect technical levels, so on and so forth. This is not going to do any of that. So that's going to wrap up my rant here. Hopefully this perspective was useful for you. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.